What's up, everybody? Welcome to another edition of Zach's Live Trader. Here with you as always, I am the bearded boy wonder, Dave Bartosiak, and today, my friends, we're looking at some rate hikes or rate pauses, just a rate decision. Rate decision coming out of the Fed. Breaking news, the Fed has left their rates unchanged. All about unch. We knew that was going to happen. If you look at the Fed Fund tool, have you guys ever used this? The Fed Watch tool. So basically all you got to do, I never remember where it is. So this is how I do it. So you guys could do it this way too. You just go ahead, Google Fed Watch tool, and then there it is, right? So it pops up right there. Here's some education about it. So if you want to learn about the actual methodology behind it, how they make the calculation, that's fine. But if you just click on the Fed Watch tool here, this is based on the Fed Funds futures. It's got a nice little countdown to the next meeting. Of course, this is happening now, so countdown's at 0. And if we take a look here, you'll see that heading into the day, there was a 98.6% chance that nothing was going to happen, right? So, ain't nothing doing. You could go out to November, see what the odds are of a hike during the November meeting, 2%. Out to December, this is where these odds are going to increase. Because 50-50, basically it's a coin flip right now whether or not they hike in November. I'm going to go out on a limb and say it's a 100% chance that they hike in November. I think it happens for sure in November. But yeah, this is a neat little tool. Here's the link. Put this in here. And then we could use that. Let's steal that link. Oh, of course, it truncates it. I'm trying to look into this whole Discord thing that we got going on. If we can, I know I can have like a pinned comment that I make, but I want to put together like a little pool of resources for you guys. So you have a place that you could go, and it's, okay, here are all the little resources and that we talk about, you know, throughout life here on Live Trader. So I guess I could get rid of that. I had right here with me dollar, or the euro versus the dollar, because I figured that this would give us the most immediate reaction. Now, guys, as you can see, let me pull up my Epic pen. Sorry. Let me pull this up. You tend to have whipsaw action taking place immediately following things like this. That's why it's tough. If you're sitting in there and you're trying to trade this bad boy, you can get stopped out and then it flushes you, which is very frustrating. So I don't recommend you guys get in here and try to trade the futures on the euro versus the dollar, or the euro futures, or anything like that heading into one of these events. But you guys know by now the way that I like to trade Forex and mess around with Forex is by using those FXEs of the world and using options on that. So here you can see the immediate knee-jerk reaction for the dollar is to strengthen a little bit against the euro. Now, why is that? Well, remember, it's not just the decision, it's also the policy statement. And what we're looking for in the policy statement is the intended pace, and what are the concerns that the market has. So I stole this from John Kicklighter. That's right, John Kicklighter. He's a Forex guy. I've been following him for a very long time. I steal only his best ideas, but I do give him credit for it. He put together this nice little chart for us. He's at Daily FX. It used basically FXCM way back in the day when I first started messing around with trading Forex. I used FXCM, and that's when I got to learn about, you know, Jamie Satie, I think that's how he says his name, and John Kicklighter and a few of the other guys over there. He put together a nice little package for us here. Again, you can follow it on his Twitter feed, but about what the odds were heading into it of the rate hike, so we already know this part, right? And then we've got the policy statement, which we got to read so we can see what's the intended pace, and what the concerns are with regards to their easing, right, or their tightening rather. And then you have what their growth inflation forecasts are overall, what their interest rate forecast is, and then here's the big part: Yellen's press conference. Okay, so what you have happen during these events is you get the initial reaction. Sometimes it'll come crawling back after whatever happens with Yellen during her speech and testimony, right? But I know a few of us, including myself, are short euros. So this does give you some perspective. This huge gap down here. And if you were somebody who was looking at this hourly chart and were a little bit concerned about the trend line that was developing here, something like an FOMC event is certainly enough to break an hourly trend line on the euro versus the dollar. So for us dollar bulls out there, hopefully this isn't one of these moments, right, where you just get the spike up and then it retraces all of it, or the spike down and it retraces all of it, right? So we'll see. Too soon to tell. Remember, we also have what's going on with the press conference, so we got to look at that, okay? But initial reaction is pushing this dollar up, okay? And you can put that in perspective, you know, on a little bit of a longer term chart. Sure, you know, a 50 pip, I call them pips. If you want to be fancy, you got to talk pips when you're talking about Forex. 50 pip drop here, not overly dramatic. Here we are starting to take out the lows, which is good, again, for the euro bears and the dollar bulls. Another thing to take a look at, of course, dollar yen. And, oh, Dave, where are you? Where is my friend Dave? Dave in Singapore should be happy because he was smart enough to go out another week, unlike yours truly. I expired last week, worthless, feel like a dingus. Look at this, 85.91. That's beautiful for him. Good for him. So hopefully that will work out and this will continue. So now this is the theme, guys. This is what we've been looking for. I think you can expect this to continue. So the major event risk here for the dollar yen was that we were going to get something that was going to derail this move, which began with this sort of stop grabber, the rope-a-dope, right? Really forced it down and then started, yeah, to Jesh, you and me, brother. I don't, it is what it is, bro. It is what it is. Bad timing on my part. I just silly mistake, you know. I should have taken into consideration that the FOMC was right around the corner and the market maybe would have waited for that. It happens. What are you going to do? Now, the good news is that's why we use options to trade this, because we control our risk parameters heading into it. So if you do something stupid like I did, I don't lose an arm and a leg, right? But the upside potential is still great. So hopefully this continues to run. Now, one thing that you got to worry about here, though, these big fibs, specifically on the dollar versus the euro, you do have the 38.2% fib of this move to this move, and that's right where you're at this sort of 112-ish area. I'm hoping this can burst on through, and I think it will. I think this continues, but right now you're looking at the battle of 112 on dollar yen, okay? All right. Now, who cares, right, Dave? We're in this to make money in stocks, right? What the heck does this have to do with me? Well, it's got a little something to do with you. Because, again, if you had on this FXY put spread, you would have been fantastic. When these things start to move, everything works out. It's fantastic. It's great. I mean, look at the move down. You get these nice little trends, nice trends up. So you could really make money on these. And we're doing it using these options. It could definitely pay off for you. Now, one thing I'm going to tell you guys, though, USD JPY, again, if this is moving in the positive direction, which is doing right now, that has a negative effect on gold. Let's see if I can get XAU USD up here Certainly I can, and you'll see gold really starting to come under pressure here, okay? Attached at that $1,300 level. What does that mean for you guys with the GDXJs of the world? You're down. GDXJ, you're down 2, all right? Now, I get a lot of questions from you guys about, hey, what's the difference between GDX and GDXJ? Typically, GDXJ is going to be the smaller companies. They're supposed to be more volatile. They're supposed to move more. Now, that leverage goes both ways. When the market's rocking and rolling and going in your favor, you're going to make a ton of money in the juniors. When it starts to go against you, then it gets rough for you. So that's basically the difference. Although, really, if you look at the beta between the two of them, it's awful close, okay? But still, the junior guys are going to move more. So, should this trend continue, gold miners are not going to be the place where you want your money, okay, if this trend continues. And GLD is not going to be where you want your money, okay, gold in general. And then what you're going to have to start doing, any of you gold bulls out there, is drawing your fibs from this low here, the June lows, to the recent high, and now you start hoping for support. So next support level, it's actually looking pretty good here. Look at this. This June high corresponds with 38.2% retracement. That could be your first step. Your next step is all the way down here under 121.60-ish. And then the 61.8 is all the way down at 120, and that's on GLD. So you got a little bit of downside there. Okay. Not terrible, though, when you're thinking about it, right? Something going from 123 down to 120. I mean, that's barely much of a move there. But that's why my favorite way to play is to mess with the GDXJs and the GDXs of the world, because these bad boys move a whole lot more, right? And then if you want to go crazy, you got the JNugs and Dust and all these other triple levered ETFs that you guys can mess around with. So here's Dust. Daily Gold Miners Bear 3 times ETF in Dust. And again, guys, this is assuming this continues, right? This could reverse. I have a gold miner in home run right now, and I am nervous. I mean, but I've been nervous about it the whole time. It's been frustrating. It's been a frustrating holding for me. So we'll see. Got to see what's happening here with gold. But right now, under pressure for sure. Let me see if I can get the statement here. FOMC statement. Looks like I do. So here's the actual statement, my friends. You could go ahead and check that out for yourself. Labor market continues to strengthen. Of course, economic activity has been rising moderately so far this year. Job gains remain solid. Unemployment. Committee seeks to foster blah, blah, blah. They talk about the hurricanes a little bit. Gradual adjustments in the stance of monetary policy will expand at a moderate pace. Somewhat below 2% inflation for the near term. Committee expects that economic conditions will evolve in a manner that will warrant gradual increases in the Fed funds rate. It's likely to remain for some time below levels that are expected to prevail in the longer run. However, the actual path, yada, yada, yada. So, I don't see too much, right? But we know it's going to come. Okay. So, there's that. I'm going to keep this actually over on the side because your boy's going to need to check it out a little bit later from a big write-up. All right. So, there's that. And if you guys hear that slow jazz music in the background, right? Not the rock and roll I got going on. But the jazziness, that's because I got the Fed waiting. So my yelling is waiting on me. Let me put this on mute actually, maybe. See? She's right there. You see her smiling face? Eventually she's gonna come up. And I can give this to you guys too. So you have that so you can check her out. Okay. Sorry guys, moving my mic around a little bit. Okay, so let's not worry about that. Now, a couple of things here as we're getting more in on these expectations. So now again, dollar yen up over 112. What does this mean? Stronger dollar. What else does this mean for you guys? Yields. I've got delayed data on this 10-year, so I don't know how good this is. But the pace of expectation is that it's going to pick up, right? The pace is going to pick up a little bit. We are going to get a rate hike. That should be good for the bank stocks. And it is. Citigroup up. Bank of America up. JP Morgan up. Is it KRE? Look at this regional banking ETF here, guys. KRE, regional banking ETF, up 99 bips here. And you're going to get a lot of that. So the regional banks, small cap, they're going to react more to domestic policies surrounding the tax reform and stuff like that. Whereas the big banks are going to do better when it just comes to that good old net interest margin. So interest rates on the rise, they can make more money on the money that they're sending out or that they have on deposit, right? So they make money on the difference. Is it too late to change the banks? No, it's not too late to change the banks. Look at where the banks were. Look at specifically regional banks. I think this is what you should be targeting is regional banks. Not necessarily this ETF, but find yourself some regional banks because they had the big run-up from election day, and then have since come down a little bit. So let's take a look at how they've come down. Let's draw. So this is a fib. Look at this. I mean, you can't even create it. This is election day. Here's the top. 50% retracement. Bid, 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 bid. Finally breaks down. And then when it broke down, all it did was tick the 61.8. See that? Like a shelf of support. And then the 61.8 again provided support. So now we've got this new sort of paradigm that we're in, right? Top, 55.80 for KRE in the short term. And then obviously you've got the target all the way up at 60. But that's quite a ways up there. But still, if you believe in it, don't think it's too late. Trevor, you got a question about this GDXJ? If you like it, is it a good idea to sell puts? Only if you believe that this dollar-yen thing is going to reverse and that gold is going to come back down. You got to be careful because this is a tricky, tricky beast, this dollar-yen pair, okay? Look at just these little mini, like it'll surge one way, stop, drop the next. Like this bad boy really can move, okay? So you got to be careful. Which is why I like options on it. But anyway, so getting back to this GDXJ, and you see I'm incorporating this dollar-yen into this. That dollar-yen continues to run. If the dollar continues to run, I think you're going to have a problem with GDXJ. So selling puts out of the money, I don't know, man. I don't know. You might be in some trouble there. Because if it really starts to unwind, it's going to get ugly. Because remember, your number one input is going to be gold on that, right? So if gold continues to come under pressure, it's not going to be so good. And you can see that. Now, you do have the 50-day moving average for gold just under the current price at $12.96. But going back, looking sort of historically, gold doesn't really care. There he is, David, in the money. See, that's what I'm talking about, buddy. So now you're good till Friday, right? Very nice. Glad to see that. Should be looking very good this afternoon. Now up here, if it can get through the stratosphere here, see, you got resistance here, you got resistance here, you got resistance here. If it can make a move, I think it's going here. I really do. I really think it is. Okay? So again, guys, so what do you want to do now? Look at some banks. Look at some banks and let her go. Okay. John's got a question. So maybe buy puts. Buy puts on, you know? Buy puts on what? You're talking FXY puts. You're talking GDXJ puts. Remember, guys, there's a delay between when I'm talking and then when you guys are putting stuff in the chat. You know what I mean? So if you can, try and be specific when you're throwing the questions out in the chat. Just because it's hard with the delay, because I don't know, you know what I mean? So the timing when you said that might have been when I was talking GDXJ, or it might have been when I was talking something else, because we're bouncing around. So just throwing that out there. 121. So we got another GDX. Okay. Yes, John. I think so. I don't think that's a bad call on either of those, or even, because these have so much implied volatility in them, selling these call spreads out of the money. No worries, John. It's all good, man. I just want to remind you guys, because trust me, I mean, you see me. I'm all over the place with these videos, so I don't expect you guys to be 100% on point all the time. So again, selling some call spreads out of the money here, maybe past 25, something like that. Let me pull up a bar chart and see what we got. We're going hunting. We're going to try to find us a honey pot. That's what I'm going to try to find. So let's do that. Pull up our options quotes here. Now again, guys, this is going to be a little bit delayed, so I'm sorry. It's going to, you know, it's going to give us, all right, so 922, meh, go out a week, right? Let's just look at this. Let's go out a week. GDX, if you're out a week, what does a call spread get you? Gets you a few bucks, doesn't it? Look at this, the 24, look at the 24-25 call spread, guys. That's just going out a week. Look at that. You sell the 24, you're going to get 51 cents, right? Or 50. Let's just call it 50 cents. And if you buy the 25 call, just to give yourself, you know, some protection in the upside, it's going to be 13. So 37 cents is your net outlay on this. Now the amount of money you're going to have at risk, difference in strike prices, which is $1 minus at 37 cents, talking 63 cents. That's right, guys. You can make 37 on 63, 58.7% in 1 week. And all you need is GDX not to trade at or above 24 at expiration. Now, guys, I want to throw a little asterisk here. These are delayed, so maybe the juice isn't quite that good, but you get what I'm getting at, right? Find something like that. That would work out for you, okay? I think that's a nice little trade that pays. Out of all of this, I think that would be the way to go. Again, assuming this yen keeps running. This is a huge, strong candle, right? Look at the range, previous couple of days, and then just a huge move here. Big move. All right, so we got about 6 minutes till Ma Yellen starts talking. What else we got? Yeah, tech getting hammered. Tech getting hammered here. Look at that. Woo! And if I had live, you know, my my futures quotes up, this would look even worse. Didn't this start earlier today, though, really? Right? This started earlier today. With the dollar strength. It's that pace. Now, you guys know how these operate. Sorry, hang on. I gotta adjust the mic. There we go. Not gonna lie, I may or may not have had a dog on my chest that whole time. Anyway, back to rates. So rates on the rise. Market not liking it so far. Not at all. Where's our friend the VIX? So, can you fade the UVXY? Everybody's always so eager to fade the UVXY, right? Because you get this huge jump up. I would wait. I would wait a little for this to play out. If you're going to fade it near the end of the day. Because if you do, you got our friend Contango working for you. So here. Yeah, there we go. So what do you mean, Dave? Remember, if you're going to mess around with the VIX at all, if you're going to mess around with UVXY or whatever, you always want to check out the VIX term structure. Because the VIX, as we know it, as I call it the VIX, right? The SIBO Volatility Index. Now that's based on the expected, on the variance of S&P 500 options, index options, right? So there's that number. And I told you guys before, you should learn about trading actual options on the VIX. Because if you're going to go long, that's a nice way to do it. Anywho, so then you have futures on the VIX contract. So you have, this is October futures, November futures, December futures, blah, blah, blah. So in something like UVXY, what they're doing is they're trying to replicate the 30-day volatility, right? So in order to do that, every day they have to adjust. And in order to adjust, what they have to do is they have to come in here and they have to sell the front month contract. They have to buy the back month contract every day, every single day. So the difference in the price works against it, right? So you don't have to worry so much about the, I mean, you kind of do, but you don't. The first month contango is just going to happen because this is going to keep approaching that level, right? So these front contracts that they're selling are constantly going to be cheaper to the tune of this contango that you have working against you. But then overnight, you're also going to have this issue of selling this to buy this, which is that second month contango. So those are working against you times 2 in UVXY, which is why UVXY goes down. So when you see these contango numbers, 6.75 is not terrible, but it's not nothing either, right? It's something, and that's constantly working against. So you could wait until closer to the end of the day to actually jump in and fade this thing. You know, you just got to be careful because this trade, you know, we get this spike and then everybody starts jumping in right away to fade this thing. Time is on your side, guys. It's okay. I think being patient is being prudent. And again, I want to keep checking in on this. And look at that. We're still off to the races. 112, 115. Oh, boy. Oh, 85.73 now on FXY. Oh, glorious. Glorious, glorious move. Okay, guys. So there you go. That's all I really wanted to do. I didn't want to stick around here and talk your ear off. Just wanted to give you a quick reaction to what we're seeing, tell you something that you should take a look at. And these are the same sorts of things that you should be watching as Ma Yellen starts talking here. And by the way, I say that out of the utmost respect. I like to be the FOMC chair, you got to be a different kind of human being, just on another plane of existence. And she certainly is. Lots of respect for her, okay? So there you go. So, guys, I'm going to watch this on my own. And you know what to look for. If you have any questions, I will be in the chat. I will see you all there. And yeah, there we go. All right. So that's all I got for you here today on Zach's Live Trader. Say what's up to my Yellen. Later, guys.